Hello viewers, I'm Sanjeev Pandya welcoming you to another episode of the Tax Time, your taxes matter show. Hopefully your tax preparation, tax planning and everything is going well for this tax season. Every week we meet here at the same place, same time with of course Mr. Ajay Kumar of SAI CPA services to update you more on taxes, because more information on taxes is always helpful.
Absolutely.
There is always something going on taxes. Did you know one of the facts that I want to share with you and our viewers is that taxes take up about 38.2% of average taxpayers' income.
Wow.
That's more than food, clothing and shelter combined.
That's interesting. Absolutely. I
Isn't
agree.
that amazing?
It is.
38.2%, and no wonder people complain about high taxes and whatnot. But taxes are taxes, we all have to pay for it. Anyway, so here we are for another episode of the Tax Time. Mr. Ajay Kumar, we have talked about several different topics and everything, and one such topic which I think can be very relevant to our viewers is a professional companies, consulting services,
Absolutely.
Not only IT, but let's say medical practice,
Right.
other kind of consulting companies and whatnot. There's always employee versus contractor matter that I have heard about.
Absolutely.
Can you give us your insight and what's the difference between employee and a contractor when it comes to these consulting companies?
Absolutely. There are certain criteria that we typically look at when we decide if this relationship is an employee versus employer relationship, or if it's a contractual as a consultant relationship. So first thing, we look at the behavior contract, financial control, the relationship. If there is a contract between the two parties, are you supposed to work yourself, or can you have this work done by someone else in your office? Are you supposed to show up at the workplace, or can you do this work at your own place? Do you have to use the machinery, the computer, the laptop that the company is providing, that we are providing? Those are the behavior control. Then we look at the financial control. Is this job, is this assignment, is major part of your income? Is this how you survive? Is this how you make a living out of it? That's the financial control. Then we look at if there is a contract between the two parties. I'll pay you this much money with no benefit, or we'll pay you this much money, we'll withhold some taxes, and we'll pay some taxes on your behalf to the IRS, to the state government. So there are several criteria that we look at. We look at this situation in total, as opposed to looking at one criteria. Oh, I'm getting the hourly rate. That does not make you a contractor. We have to look at where you're supposed to work. Who is deciding what are you going to be working on? Do you have to perform this work yourself? All those criteria are looked at in total before we decide if this relationship is an employee-employer relationship, or if it's a contractor-consulting relationship.
Okay, that obviously explains well on a slide also that we just put it on the screen. Now, question comes to me is that employee, contractor, and then there's the owner of that consulting company, right?
Right.
Professional company. Who benefits out of this scenario? That means my question to you is, would employee want to prefer to be an employee, or would they want to become a contractor? And would the owner would rather hire employees to do their work, or would he rather have contractors to their work?
That's a great question, and that's the gist of this whole episode actually. An employee-employer relationship enforces certain taxes that are paid by the employer and certain taxes that are paid by the employee. They are Social Security and Medicare taxes. So in employee-employer relationship, 6.2% of the Social Security is paid by the employer, and the same 6.2% is paid by the employee. 1.45% of the Medicare is paid by the employee, 1.45% is paid by the Medicare. So the IRS, the government, is getting 15.3% taxes. Half of it is paid by the employer, half of it is paid by the employee. So employer wants contractor so they can save some taxes. They don't have to pay the Social Security, Medicare taxes in a contractual relationship, which they are required to pay in an employee-employer relationship. The employee wants to be a contractor. There are a lot of deductions that are allowed for a contractor that are not allowed for an employee. So both parties are pushing for a contractor relationship. Nobody wants to be an employee-employer relationship. IRS, the government doesn't like it. Government is losing money on both sides.
Oh.
So government forces, if you have these three criterias, behavior control, financial control, contractual relationship that we showed on our first slide, if those criteria are met, then it's not a contract relationship. It's an employee-employer relationship. Employer is held responsible to collect certain taxes from the employee and make payment to IRS for their portion of the taxes and the employee portion of the taxes.
Okay. Let's look at the scenario that why would they want to become a contractor? Because they might be losing out certain benefits. Suppose if they are offered by the owner.
Absolutely.
Certain benefits such as medical insurance or sick leave and paid vacation and whatnot.
Absolutely.
If they're offered. Contractor would have to pay everything from their own pocket.
Typically.
But contractor is at its own time, contractor has all the freedom. Whenever he or she wants to go to work, they can go to work and they can work on it. Now, employee, you think that they would make more money if they become contractor or vice versa?
It could be either way. Let's take an example. If someone is getting $10,000 salary per month as an employee, and let's say we have some 2 weeks vacation, we have some health benefits, we have some other benefit. We put a value to each benefit. The health benefit are, let's say, $1,000 per month. 2 weeks vacation is 10 days of vacation, which could be worth another $3,000 for the whole year. Then we add it all up. As an employee, you have $10,000 of salary, you have $3,000 of vacation pay, you have $1,000 per month of health benefit. As a contractor, you must get at least this much money, $10,000 plus another $1,000 plus another $250 for the vacation pay, plus the employer portion of the taxes. A typical contractor gets 10% more money than the employee without counting the benefit. And then you add up the benefits on top of it, Sanjeevji, to see how much money the contractor should be getting.
Okay, that's an interesting point. Anyway, so now while we're talking about pay, let's just talk about W-2s versus 1099s.
Absolutely.
Because that's employee and a contractor related also. We're going to talk about that right after this messages. Please don't go anywhere. Welcome back to the second segment of the Tax Time. Your taxes matter right here. Every week we talk about taxes, general in taxes and all the latest changes in taxes and what you should be keeping in mind when you are filing your own tax return, because there are so many things to keep in mind. Anyway, Mr. Ajay Kumar of SAI CPA Services is with us, and today we're talking about employee versus contractor when it comes to professional services, consulting firms and whatnot. W-2s versus 1099s.
Right.
What are the benefits? And
Sure. An employee is typically expected to get a W-2 at the end of the year. Similarly, the document, the income statement that the contractor gets is called 1099. A W-2 is must for any income. If you are an employee, you made $100 for the whole year, you will still get the W-2. A 1099 is only required if the business paid more than $600 to somebody throughout the business, throughout the whole year. A 1099 is not required to be filed if the business paid less than $600. It's the same statement, similar statement, employee meaning W-2, contractor meaning 1099. On W-2, under the new tax reform bill, you are not allowed to claim unreimbursed job-related expenses. A lot of those expenses that you incur in carrying out your W-2 job are not allowed. Say, for example, if you had to buy a laptop, you had to go to the workplace, all those travel expenses, client entertainment expenses, office expenses, home office expenses, all those expenses are not allowed if you have a W-2 job. On a 1099, all those expenses are deductible expenses. Going to the workplace, you can use 54.5 cents standard rate, or you can count the actual, either or. If you had to buy a laptop, if you had to buy uniform, if you had to go specifically to meet a client entertainment, there are a lot of expenses that are still allowed against the 1099 income, which are not allowed against the W-2 income.
But then they would be taxed at a higher tax rate, right? Contractors would be taxed at higher tax rate for employee who gets W-2, and obviously if they're filing married, filing jointly or single, doesn't matter. would their tax rate be different than contractor's tax rate, considering contractor gets all the perks to be deducted, all these expenses that you mentioned? If they are allowed to deduct that,
right,
will their tax rate be higher?
Well, the income tax rate remains same for both parties.
Okay.
The contractors are allowed certain deductions, but in lieu, they have to pay self-employment taxes. So on the net income, if you get a 1099, nobody has paid your Social Security tax and Medicare tax. If your income is $10, you are giving $10. On a W-2, if your income is $10, you get $7. Some taxes are pre-withheld and paid on your behalf to the government. On a 1099, you get whatever your rate is. So at the end of the year, you claim certain expenses that we just discussed. On the net income, you are supposed to pay the self-employment taxes, as well as on top of the self-employment tax, the regular income tax, which is same for both parties.
Okay. And now who must file 1099?
For businesses, it's a business requirement. So if you have a home and you paid $1,000 to a loan mover, you are not required to file any 1099 for that loan mover.
Okay.
If you are a typical couple and you have a babysitter coming in, you're not required to file a 1099 for that babysitter. 1099 is a filing requirement for the businesses who paid more than $600 to an LLC, another company. A 1099 filing is not needed for the corporation. If you have some services coming from a corporation, say we are a corporation, then a 1099 is not needed for us. A 1099 is issued by the businesses where they paid more than $600 to an independent contractor, including the LLCs.
Okay. Now that $600 limit has been around for many years. It hasn't changed, huh?
No, it's not. Yeah, it has not changed.
I can remember at least several years. I mean,
it's been many years since.
It's been many years,
absolutely.
And it hasn't changed.
Yep.
Do you think, as a CPA, as a professional accountant, do you think that should go up?
It should. $600 is pretty low in these days. But the requirement is there to make sure people honestly report their income. Say if you paid $600 to an independent contractor and you did not issue the 1099 to this person, then the IRS has no way to find out if this $600 was paid or not. In theory, somebody's deduction must be other party's income. If the business paid $600, they want to be able to deduct this money.
Right.
In order for this amount to be deductible, it must be included in someone's income.
I see.
But IRS has no way to find out if the 1099 is not issued. So the onus, the responsibility of filing 1099 is with the business, not with the independent contractor.
Okay, with that note, we're going to take a break. We'll be right back after these messages. Welcome back to the third segment of the Tax Time, Your Taxes Matter show. In today's episode, we're talking about employee versus contractor. When it comes to professional companies, consulting companies, this has been a very, very talked about issue, employee versus contractor. Should one person be an employee or should that person be a contractor? That's exactly what we are discussing. Mr. Ajay Kumar of SAI CPA Services, you actually explained all of us in detail employee versus contractor benefits, advantages and disadvantages, I should say. Now, if that's the case, obviously it sounds very interesting to be a contractor,
right,
or it sounds very convincing to be an employee.
Right.
In spite of that, why there are so many court cases filed, with IRS
right,
when it comes to this matter?
You're 100% right. So based on the benefits that are described, everybody wants to be a contractor. They have the same job profile. All the companies wants to hire these people as contractor, not as an employee, to avoid the tax liability, the Social Security, the Medicare. The company saves almost 10% of these taxes. The employee is able to deduct a lot of expenses that are not allowed on W-2. So everybody wants to become into a contractual relationship, not an employee-employee relationship. So IRS scrutinize these relationships very, very thoroughly. And when we see there is a behavior control, when there is a financial control, or there is a relationship control, you have to do this work. You have to come to my office to do this work. You have to use my machine, my laptop. You cannot give it to somebody else. You have to do it. I pay you at this interval the same amount of money every month. It's not dependent on the particular assignment. It's more of an employee-employer relationship. That's why there is a lot of court cases. I'll take an example.
Please.
I was in a court case, I was defending a court case where this company, they were paying fixed amount of reimbursement, and this company was going through an audit. Somebody referred my name to them, so I went there. So the relationship was, out of the, let's make up the number and we wouldn't give the company name, out of the $10,000 salary, they were giving $6,000 in salary and $4,000 per month in reimbursement. IRS case was, you cannot have reimbursement fixed amount. Reimbursement by definition is supposed to be out of pocket expense. It needs to be substantiated. It will vary every month. If you have $4,000 given to an employee every month, fixed amount, same interval, constantly, it's not a reimbursement, it's salary, and it needs to have the payroll tax, Social Security and Medicare tax deducted on that $4,000. It's a very, very common situation. Everybody wants to get into this contractual relationship, factor some sort of reimbursement in the salary, and it's a common case with the professional firm, with the IT companies, with the doctors, where there are highly paid employees.
Really? Okay. So you were part of that case, and you were.
We were defending the client. This was a new client for us.
Correct.
And we were giving our name out because we do a lot of these IRS court defense cases.
If they had come to you before that, before paying them $4,000 fixed amount as a reimbursement, perhaps this legal matter would not have occurred.
Well, we would have guided them in the right direction. As I said, the reimbursement is meant for the actual out-of-pocket expense. You can't expect to have exact $4,000 every month spent for a particular job.
That's very suspicious.
That's suspicious.
That is
then
very
we would have
suspicious.
guided them in the right direction.
Right.
It's not worth the money to get onto IRS radar. This is not legal.
Correct.
And the funny thing is, they were not doing it for one employee. They were doing it for a lot of employees. So it gets more suspicious.
Absolutely.
And it takes one incident for IRS to open up a case.
Exactly.
Once they look at one employee, they will not stop at that employee. They will look at all the payroll records. They will look at the tax records. And then it becomes evident that this is
like
really not a
opening
reimbursement.
can of worms.
Absolutely.
That's exactly how it is. And then with that, in relation to that point, I'd like to add one fact here. Is that
Please.
Did you know that about now 65 to 70% of taxpayers must hire or seek an advice from a professional accountant?
Well, under the new tax reform bill, a lot of things have changed. So the old tax bill was improved every year, but it was there for over 30 years. So people learned about it. A lot of people knew the basic things about the tax law. This year, a lot of things changed.
Exactly.
A lot of things that were deductible earlier, unreimbursed job-related expense, your locker fees, your tax preparation fees, they are not deductible anymore. A lot of things that were not deductible earlier can be deducted now. So based on these changes, a lot of people are seeking professional help as opposed to trying to do it themselves.
And they should, and that's what the show is all about. Now, I actually have some questions
Please.
from our viewers. Quickly, I want to go through it. How should someone decide between employee and independent contractor?
Well, as far as the financial relationship is concerned, if an employer is paying you, let's say $10,000 as an employee, you should be requesting at least 10% more. You should be asking for at least $11,000 in our example, if the relationship is as a contractor relationship as opposed to the employee versus employer, because you will be on the hook to pay your self-employment taxes as opposed to the employer paying the Social Security and Medicare taxes on your behalf.
Okay, and the last question, Social Security benefits for self-employment tax.
So Social Security benefits are still provided, because when you file your taxes as a self-employed, you pay self-employment taxes. So you still qualify for the Social Security taxes.
Okay.
So you just have to have at least $5,800 for the whole year in net income under self-employment to qualify for the Social Security for the 4 quarters.
Okay, and the last question is there a formula as how much more money should someone ask for?
Well, it depends how much is the salary, what are the value of the benefits, and how much taxes, additional taxes you have to pay. So you factor the salary is $10,000, the health benefit for the whole year is, let's say, $12,000, so I want additional $1,000. If there are 2 weeks of vacation, how much is that worth based on your salary per month? And then you see, okay, now I have to pay my own self-employment taxes. You factor 10% additional for your self-employment taxes. Then you come up with a formula, you come up with an amount. This is the amount you want if you have an employee versus contractual relationship.
Okay, very well explained, very well. Thank you so very much. And viewers, if you have any tax-related question, you can send us an email, taxtime@tvasiausa.com. That's our email ID. I'd like to thank Mr. Ajay Kumar of SAI CPA Services and explain to us and guide us, basically educate us, inform us when it comes to tax reform. We'll be back next week with another topic. Thank you so very much, sir.
Yep, you're very welcome.
Thank you. And I am Sanjeev Pandya, wishing you all happy and tax-free week ahead. So long.